Hi everyone, welcome to the session on backtesting, which is part of our program on quantitative trading again. Welcome Sunil, it's nice to see you here again. So guys, as part of the webinar series that we have organized, we've already conducted two sessions previously. And the first session was an introduction to the industry nature and what all entails in the industry of quantitative trading. The second session held last week, we talked about how one can generate a trading idea, and Sunil showed us the correlations between certain indices and stocks, Nifty and India VIX being one of them. We saw how we can generate signals from the data and also test our hypothesis. So that was mostly the first two steps of the entire flow of how somebody can start making the strategy from scratch, take it, generate a trading idea, do backtesting, do paper trading, and finally go live. So today, the third session, we'll be discussing what is backtesting, what are the benefits of backtesting, why you should do it, and then we'll also provide a hands-on experience on the two approaches, how we can do backtesting. One approach is using a popular library of Python, which is Backtrader, and the other approach would be to build the backtesting function manually and using your own code so that you know it's more customized to your strategy. So we'll be seeing both of these cases in two different Python scripts, and hopefully you'll enjoy it. So over to you, Sunil. Welcome back. Over to you.
Thanks, Salil. Thanks for giving a recap of what we have done in the last two sessions. And welcome all the audience. And thank you to taking out time for this weekend. This Friday, so it's going to be weekend. So it's a big thing to take out time and attending this session. So like Salil has already mentioned that we have already covered two main stages of the quantitative trading, that is formulation of the idea and verification of the idea. In this stage, we will be focusing on the backtesting. That is nothing but the extension of what we have done already in the last two stages. Extension means we will be doing the same thing, we will be building the logic, we will be verifying the logic, but in very detailed manner. That is what the backtesting is. So let us see where we are. In backtesting, at high level, we cover two things. We write code and all the rules for buy and sell. That is actually the extending part of the formulation of the idea. And next thing, we verify the rules on reasonable big size of data set. In the previous stage, we have verified the hypothesis on the sample data set. Here we will take the bigger data set, which will cover all the market scenario which is applicable for the strategy. And in the next sessions, we will be covering optimization, paper trading, and live trading. That we'll cover in the next sessions. Let us focus on the backtesting as of now. So, like we have already discussed, that in this is nothing but the extension of the previous two stages. So, and why backtesting is required? Backtesting is required to verify your strategy in all market scenario which we can foresee in the future. So what we can foresee in the future, we can see whatever has happened in the past. So it means we have to verify the strategy in the historical data. So we need to cover as many market scenarios as you think can happen in the strategy, depending on the period of the strategy you want to run in the future. And once you get to know that what can happen, you can try to mitigate the risk also by analyzing the backtesting result. This is what the backtesting is. Now, if we talk about what exactly we need to do in this, we need to do the data gathering. In data gathering, we need to see what kind of data we need. It could be price and volume data. It could be macroeconomics, microeconomics data that we have discussed in the first session itself. So different kind of data are required. So we need to see as per our strategy, what exactly we need, what exactly kind of data we need, what is the duration of the period of the data we need for the backtesting, and what is the time frequency. Time frequency means in which time frequency the trades are going to happen. Is it going to be daily, or maybe minute, or 5 minute, or 10 minute, or maybe hour, something like that. Now we have to decide that how we will perform the backtesting. There are two ways of this. One is there are so many backtesting frameworks are available in the market, like TradeTron is there, Blue Shift is there, to name a couple of them. So we need to see how complicated is our strategy and in which backtesting framework it can fit. And are we comfortable with the backtesting framework or not? That also we need to decide. So we need to do little fit gap analysis between the framework functions and the logic of the strategy. Maybe it is also possible that your strategy is too complicated, and maybe you might be using machine learning, artificial intelligence, and so on. And it may not be, all these features may not be available in some particular backtesting framework. So you need to see whether that backtesting framework is good for you to perform the backtesting or not. So that is very much required. After you finalize and choose backtesting framework, then you can decide on that. Other way is, if you want to keep your logic only up to you, then you can think of going developing your algorithm from the scratch. That is, that we can say we can customize your algorithm from the scratch. So for that, you need to have well versed in some programming language or tools like Python, C, C++, or something, Java maybe. Or we also need to see from where we'll get the data, who is the data service provider.
Okay, so Sunil, just for some clarity here. So backtesting essentially helps us see how our strategy is performing in the past, right?
Yeah.
And after we have prepared the strategy, how long or how much of a look back period should we take? Should we test our strategy on like couple of years, or is it depending upon the nature of the data that is going inside the strategy? So for instance, let's say I am populating my data frame or Excel with the minute data. So how long should I backtest my strategy on?
See, if it is intraday strategy, as per me, I can tell about me, everybody has different perception. So for daily frequency data, it depends upon the number of transactions or number of sessions also which we are planning to test. Let us say for daily, if you are testing on the daily frequency, then in 1 year you will get only 250 sessions, and in 10 years you can get to 2500 sessions. So I would say for daily frequency you need to test at least for 15 years of data. And if you come to minute frequency, 1 minute frequency, then maybe 2 or 3 years of data is also sufficient.
Got it.
Because you will have enough data. And actually, if we talk about intraday scenarios, then that is totally different from the daily frequency scenarios. So
exactly, that was what I was wondering about. Yes.
So coming back to backtesting framework and custom algorithm, let us see how to choose them. So like we have discussed, there are two kind of platforms. In the first session we have discussed, two kind of frameworks are there available in the market. One is you can write the logic without writing any code. So that we say no code algo trading framework. So they have some UI in the place where you can just write down the rules without having the knowledge of the programming language. And another one, but it has some limitations are there, because whatever functions was written by the algo trading platform provider, only those features are visible, and those only you can use to develop your logic. But if we talk about programming language, the framework which supports programming language, then the limitation is very less. Now it all depends on the capability of the programming language, whether it supports that particular feature or the logic which you want to implement or not.
Correct.
So now it all depends upon your skill set also. If you are not familiar with Python or C++, then I would say you can go for the no code. If you are very well versed with the very much technical person, then you better go for a programming language platform which supports that.
Sure.
Now, next thing is there are few licensed trading tools are also available, which can be deployed in your machine. Some of the popular ones are MeBroker, MetaTrader, NinjaTrader. So the speciality about these softwares are they have specific functions. I mean, you can write they have their own programming language into it, and they have some specific functions and features which supports trading very much. Like optimization is very much easy. I mean, you can visualize the data in that chart, candlestick chart, like these kind of things. You can easily look into this software. So all these features are available in this. But still they have some limitations because they are not proper programming languages. They're designed only for trading, so they have some limitations.
Okay. So they might have a little bit less flexibility than compared to someone who is writing the scratch code.
Absolutely. So as per my understanding, some of these doesn't support the artificial intelligence or machine learning or sentiment analysis. So if you are planning to use these kind of things, then these may not be the good idea to use it. Then better to go for programming language or tools. Go for some specific programming language which you are familiar with and develop the code by yourself.
Got it. Thanks, Anil.
So one of the most popular programming language for data science and algo trading is Python. So there are so many open source libraries are there, like BT, Backtrader, TLib. And Backtrader is one of the very popular library, and TLib is one of the very popular technical analysis library. So we'll be using one of them in the coming example. Next one we'll talk about C++. Is also very popular, but it is mainly used for high frequency trading. So I would like to say that as a retail user, it is not possible for us to perform the high frequency trading. So it is generally done by high institutions because it needs different kind of framework infrastructure. So we'll not focus here. We'll just talk about what we can do. And last but not the least, the visualization tools. So visualization tools are very much like we have seen in the last session, how we have used visualization tools like Tableau to come up with the trading idea. We just had the raw data and we have almost developed the strategy, and we have verified also in the Tableau itself without writing much code. So I would say Tableau is very much required, Tableau or Power BI, some visualization tool to perform the test, backtesting also.
Right.
So we'll start with the example now. We'll take one example of one of the very popular backtesting library called Backtrader. So like in this, we have already decided what is the library which we are planning to use, that is Backtrader. And we will be using the data service provider as an open source library called YFinance. So I have already listed down the steps to write down the algorithm, and I have already written down the code of the algorithm as of now in the interest of the time, so that we don't waste too much time in writing. So instead of that, I will run and explain the code to you, that how it works. So these are the various steps. First of all, we need to install the backtesting library, that is Backtrader. I will just list down the steps first, then we'll see that how we'll perform these steps in the technically. After that, we need to import those necessary libraries, like first we have to install, then we need to import. then in that backtesting, the backtrader has a backtesting engine called Cerebro. We need to instantiate that engine by using like this, import backtrader as BT. Then Cerebro is the name of the engine. It is actually a class, but in the convention of that library, we are calling it as engine. Technically, it's just a Python class. So this.
Somebody is asking us if we have any open source and free tools available. So just to inform everybody, all the tools that Sunil is currently using, be it a Jupyter notebook on which you can run your Python scripts, or using very public libraries like Yahoo Finance or Backtrader, these are all open source and freely available over the internet. You can use the same.
Absolutely, Salil. You have rightly mentioned. We are using only the libraries and the tools which are freely available everywhere. We are not focusing on anything for which you have to go and buy something. Even the Tableau which we have used in the last session, we used a public version of the Tableau, which is freely available for everyone. Anybody can download and use it.
Right.
Yeah. So coming back to the algorithm now. So this is how we can instantiate the backtesting engine. After instantiating, we just need to follow these steps. We need to add the data which we have downloaded to perform the backtesting. In the engine, we have to add the strategy. I hope my screen the font is visible. Is it readable? Salil, is the
yeah, I can see your
font
screen.
readable?
Yes, Sunil.
I try to make it a little more bigger. Okay. So we have to add the data. We need to add the strategy in the engine. We need to set the cache, what will be the initial cache by which the strategy will start. And gradually we'll keep on running the strategy. We will keep on running the buy and sell operations over there. We'll set the commission with the transaction charges for each trade.
Sunil, I guess the screen is not visible to our viewers.
Screen is not visible or font is small?
No, the screen is gone. Yes, it is now available. Yeah.
Are you able to see Jupyter Notebook in my screen?
Yeah. Now we're able to see the screen.
Okay, great. Do I need to repeat the steps again?
Yeah, we can give a short brief of what we are trying to achieve here.
So I have listed down the steps here for writing down the algorithm, which includes the installation of the libraries, instantiating the backtesting engine, like here by importing the backtrader as BT, and this is the backtesting engine called Cerebro, which is a part of one of the class of backtrader. So we can instantiate like this.
Okay, so if I understand these steps correctly, and help me if I am wrong, what we are essentially doing is we are importing this public library Backtrader, which already has what they call an engine, Cerebro. We create our strategy and put this in this engine, Cerebro, and it will process it and give us an output, which will probably have some signals on the past data. So data, strategy, and the broker cache, everything we feed into this engine of Backtrader library, and it does all this backtesting for us.
Absolutely. So when we add strategy in this engine, then we need to set the rules in that strategy. So we need to create a new class where we have a set example of some convention we need to use, that in that particular function we need to write that rules which we want to use in the strategy. Like this we need to follow. This is just the steps. As we go further, we'll see the code also.
Sunil, can we increase the font a little bit more? that it will be more visible to our viewers.
Is it better?
1 second. Yes, it's much better.
Okay.
Yeah.
So
We can probably come to the code side.
yeah. So initially, like we discussed, that we'll install the libraries. So this is the way to install. Pip install name the library. Because it is already installed in my machine, so I am not installing it again. But this is the way we can install it. We can put this command either in the terminal command prompt, or if you're using Google Colab, you can just like that put it in the one of the cell and run it. After that, as we have discussed, we can import the necessary libraries. We have already installed these two libraries in the previous cell. Now we are importing it. And this is the trading strategy which we have decided that we'll work on. So we'll saying this is a trading strategy, but it is based on some hypothesis. Hypothesis is, if the close price of Nifty goes above 200 daily moving average, then it means the uptrend will start, because close price is going above the moving average. So it means the uptrend has started. And we are assuming that momentum will be highest for next 3 candles whenever this event will happen. So we'll take the position of buy and we'll maintain it only for 3 candles, not after that. We'll exit it after that. So if we going for long, then if the close price of Nifty is above 200 moving average, then we are taking the position and we are exiting after 3 candles. Similarly, if you are taking the short position will happen if the reverse will be there. If the close price of Nifty will go below 200 daily moving average, then we'll take the short position and again we'll exit after 3 candles. We have taken the data of almost 12 years in this. Like we have discussed, 10 to 15 years of data we generally should take for the daily frequency.
Right.
So we have taken 12 years of data, and we have taken interval or time frequency as 1 day. Script is Nifty.
Got it. So when you say that after 3 candles of entry, you will exit your position, you basically mean after 3 consecutive days, because the interval is 1 day.
After 3 consecutive sessions, yeah.
Got it.
Because there may be Saturday, Sunday, or maybe holidays in between. So you say after
right. So three trading sessions.
Right, absolutely.
Okay.
So this we have defined the strategy. This is the strategy which we have. Now we will define it as we have discussed as we have seen in the steps. So for that, we need to create a class where we are instantiating the moving average first of all. Now this BT backtrader has some indicator class also, which has set of indicators which we can use. But in our case, we need to just use simple moving average. So we can use bt.indicators. Indicators is the class. In that, simple moving average is the function which we are using to create the simple moving average. So where we are passing the price, that is close price, and where period is 200. And we are initiating the order variable as none as of now. So in this backtrader library, we need to define all the rules in next function. So like I said, we need to follow some particular convention. So here we are saying, let us say if not self dot position, mean there is no position is made so far, then we'll check the condition. If close price is greater than moving average price, so you must have seen here we are using 0 here. 0 in backtrader always represent the current row. So it always, yeah. It
Okay,
always
okay.
represent the current row, and -1 represent the previous row, the last row. As we know in the pandas also it happens. -1 is the last row, but 0 is the current one. This we need to remember. So actually, backtrader runs a loop for this particular strategy for all the rows one by one. So that we need to remember this how it works. So it is checking when there is no position, then you check whether current close price is greater than moving average, and previous close price is less than moving average. It just mean to say that close price is become greater than moving average just in this candle, and before that it was nothing. It was
Okay, so
not.
this is the point which basically tells you the index where the crossover is happening. The
Absolutely.
price is cutting the moving average,
Yeah.
and if the current price is greater and the previous price was lesser, that it basically means that we have got the position of the crossover. Understood.
In that particular scenario, we will be creating the buy position or long position, and if the reverse happens, then we'll create the short or sell position. This is what we have to do.
Right,
And
right.
when neither of these is happening, and if the position, when position is not null, either of these position is open, either buy or sell, then we will check the three candles are completed or not after the position. If the three candles are completed, then we'll come out of the position.
Okay, okay. So
So
this position variable of the self object that backtrader initiates or instantiates with 0, and after you create these buy and sell log, it changes the value of this position variable.
yeah, it starts with none, then as an order is also none, and after that it keeps updating as you rightly said.
Okay, okay, very nice.
Yeah. As you have seen that we are using one of the function called log inside. This is a custom function where we are just printing down what we are doing, what step we are doing. Like here we have created this buy order. Like here we must have seen self.order is equal to self.buy. Buy is the inbuilt function of backtrader. So here we are initiating the buy, here we are initiating the sell. We're just printing it on the screen that this is what we are doing using the log function.
Okay.
And when we are saying notifying the order, then it is internally capturing this information and storing there within the backtrader.
Excellent, excellent. So basically, you are storing all your order executions in a log and printing them.
Absolutely. So that's all.
Okay.
Your work is done. That's how
So
simple
we
it.
can keep a track of all the orders that are getting sent through it just by this 2-3 lines of log function. That's
Yeah.
excellent.
So, and now it means we have already defined the strategy. Although the strategy was very simple, but still it didn't we didn't need to write so much of line of code to, sorry. So next thing we have to do is we need to add the data in the Cerebro. That is the engine. We added the data. We have just created the data is from Yahoo Finance, downloaded for 10 years and added that in the engine. After that, we have added the strategy like what we have defined in the previous cell. We have defined that strategy and we have added it here. We have set the cash as 2 lakh rupees here, and we have set the commission as 0.001%. After that, we had run that. So we have just performed all the steps which we have initially discussed. That's all. And if we run, I will run it now. I'm just running it again. Restart and run all. So
this.
So this is the default chart it has created. I will just make it big and see that how it looks like and how to interpret it. So this is the default chart. We can make different kind of other charts also. Let us first try to understand this chart. Then I will tell what are the possibilities to create more charts. So this is nothing but the candlestick chart it created here, where you can see the red and gray line, great candles. These are nothing but the price chart of Nifty 50 in candles way. But because the number of days are so many, that's why it is difficult to visualize the candle. But if as we are moving the cursor, you can see on the below, it is showing the X and Y axis.
Yeah.
And the other line, the red line, is nothing but the simple moving average line, which is, you can see here also they have labeled here. This is simple moving average is the red line. And this is the gray and the red are the candlesticks. And the buy and sell signals are denoted by these arrows, up and down arrows. Down arrows is colored in red, up arrow is colored in green. So wherever the arrows are there, those are red or green buy or buy or sell signals. And if we see on the above section, these are various trades has completed during that time frame. So wherever blue is there, there is one dotted line is there, which shows that zero profit or zero loss. So whatever dots are coming on the top of that line, it means those went into the profit, and those are below that line, this dotted line, those went into the loss.
Understood. So this charting capability is also provided by Backtrader only. We don't need to use any Matplotlib or any charting libraries.
That is all inbuilt. There's some more charting plots are available, which we can develop using this Backtrader. So you can explore it by yourself. You just need to use the same convention. You just need to change the parameters inside the function, and it will keep on coming. I will suggest the audience to go through with the Backtrader documentation. So, but this is good to start with. What you have discussed.
Okay, got it. So essentially, we need to create a strategy, which in your case we are calling my strategy. Can we see that portion of the code?
Definitely.
Sunil, we can zoom out of the screen a bit. Yes. Okay. So, all right. So you create my strategy within the class, right? Class my strategy.
Yeah, here.
Okay. And the next thing is you create some functions like next and log and notify order within this.
Yeah, most important function. There are only two main important functions within the strategy. One is init, another is next. In the init, we will be instantiating the indicators, and in next we are just writing the logic in those indicators.
Okay, got it. And lastly, in the main function, we are just adding this my strategy to the Cerebro.
Absolutely.
Okay.
It's very easy to use.
Understood. I think this is a fantastic way to do back testing because it removes all the dirtying your hands in, let's say, calculating indicators or generating charts and making sure that the position or the order is getting logged correctly. So all that hustle is taken care of by back traders. So I think it's a good convenience, right?
Yeah, you're right. But
All right.
everyone has their own preferences. So I generally use my own function to do the back testing. So maybe we can discuss one more example where the people or the audience prefer to develop their own backtesting function and use it.
Absolutely.
So okay, I'll come over to the next example. So here
So in this strategy, we will not be using any public library like Backtrader. We will be developing the backtesting function by ourselves, and that would be the approach, broader approach, right?
Absolutely, everything will be written from the beginning, from the scratch. I'll just try to increase the font here. I think the font of the code has increased. Is it big enough? Or shall I increase it a little more?
Yeah, I think it's okay, but if you can increase it a bit more, it will be perfect.
Okay, I will do that. It is 18 as of now. I'll make it 20. Just for the awareness of the audience, we are using Google Colab. It is a framework provided by Google where we can run the Python program. The platform is very similar to Jupyter Notebook, but everything is being stored in the cloud.
Oh, nice. That's quite nice.
So we don't need to install anything here.
Yeah, I think some of our users were asking us like which platform we are using. Then again, I would like to highlight that previously we were using the Jupyter Notebook, which is again free of cost. You can get that and run your codes on that platform. And as Sunil rightly said, this Google Colab is also a very similar IDE, just that it is on cloud and all your code gets stored there. So you can use any of these platforms to write your codes and check the observations.
Absolutely. So we'll start with this. You just need to have Google account to start working on the Google Colab. That's all. And
yeah,
like Anaconda, there's like so many libraries are already installed there in the Anaconda framework. Similarly, in Google Colab also, this which is being commonly used, like Pandas, NumPy, sklearn, all those are already there. But the not so popular or third-party applications or modules are we need to install. Like Y-Finance, we need to install it here. So we will be installing Y-Finance because here we need, this is the data provider we are using to download the data for our strategy. So we will be installing only Y-Finance, nothing else. And for the interest of the audience, I have just written down the strategy here. Let's read it. I will read it for you. First of all, this is only buy-side strategy. We will not do the selling. And the thing is, this logic is applicable for all the constituents of Nifty 50 because all of them are quality stocks. So we can buy them and we can keep it for some time. The logic behind the strategy is it's that if any particular stocks falls continuously for 4 days and it falls below some specific level of standard deviation, below the simple moving average, then we can say we can buy it. The thing is, if you remember, in the last session, we have discussed about normal distribution, that how normal distribution bell curve works. That as we go further on the left or leftmost side and rightmost side, first of all the stocks follow stocks returns follow the normal distribution curve. So as we go on the right or left extreme side, the probability of happening the occurrence of that keep on decreasing. So it means if some particular stock is keep on falling for 4 days, then there are very less chance that it will fall on 5th day also. So the very good chances are it will start going up, because it is falling to certain specific level. Maybe we are checking for standard deviation 2, then it will not fall further maybe. This is our hypothesis. On the basis of that, we will be developing the strategy. So, and the exit criteria will be if the same stock will keep on going up, crossing the upper level, upper standard deviation level, 3 days together, then we'll exit from that stock. That is the logic. So like here we have mentioned the long entry criteria and long exit criteria. This SMA is simple moving average. BB width is Bollinger Band width, because we also call this as a Bollinger Band, but we have just told. So we will be using this Bollinger Band width as 1.5 or 2 as per our convenience. We are saying that simple moving average minus Bollinger width bandwidth multiplied by standard deviation is greater than close price. When lower level of the Bollinger Band is greater than close price, then we'll take the long position if it happens continuously for 4 days. And we will take.
So essentially, if the closing price of whichever underlying Nifty 50 in this case crosses the upper portion or the upper band of the Bollinger consecutively for 4 days, you will generate a long signal. And if it does the same with the lower band of the Bollinger for 4 consecutive days, we will initiate a exit position.
Yeah. So for making it understand better, I will do one thing. I will run it and I will explain through some diagram, some plot of some particular stock. Then maybe we can understand better what we are saying.
Yes, that would be nice.
I just ran it for I run all the cells now. I have plotted the graph in the end. So this is of some specific stock. We'll see which stock it is, but it is following this pattern. So blue line is the upper Bollinger Band level. Green line is the lower Bollinger Band level. And orange line is the close price of the instrument. So if you see, just by looking at that how it works, let us say this has came out of that average. This is the famous pandemic situation in 2020, March 2020, when the market fell very bad. So in this situation, if we see, it came out of this lower standard deviation 1 time, 2 time, 3 time, 4 time. Then 5th time we have taken the position. And similarly, when it came again, maybe here it 3 times consecutively, then we exited the position.
Okay, understood. So
this is
just the blue line.
We'll see how the logic performs. We will see in the table, transaction table also.
Sure.
So, and now this is how we understood that how it is going to work. Now let us see the coding part. That how we structured the program to develop this algorithm. So like here also we have imported all the necessary libraries like pandas, numpy, datetime. So this particular strategy is little more complicated than the previous one. So we may have to write more code than the previous one. Anyway, because we are writing the code from the scratch, the code will be little more than previous one. First of all, we have written one backtesting function here. The name of the backtesting function is backtest strategy stop loss. I mean, it is backtesting the strategy with the stop loss. It has various parameters. We need to give the data frame, historical data frame, strategy type, like we have mentioned here. Strategy type could be long or short. We have to give entry or exit criteria. What will be the positional field? What will be the price field? Price field could be close price, open price, high price, something like that. We need to give the stop loss percentage. We need to define target. And there is one more very important parameter, that is only profit. Generally, what happens in the positional strategies, if somebody has bought the stock for some time, then he doesn't want to sell it till the time it goes in the profit, and he want to hold it for till the time. So we have used this parameter. Only profit means we will, if only profit is equal to false, then whether it goes in the profit or loss, it will come out. Strategy will come out from the position. But if only profit is equal to true, then it will not come out till the time it goes in the profit.
Got it. So basically, you've added another layer of check, which is checking that if there is profit, only then execute. If there is no profit, then probably wait for other signals.
Yeah, like here also we have mentioned, it should wait for trade to be in profit, true or false. We have to give true.
Understood.
Yeah. So we'll not go into the detail of this function because it is a quite lengthy function. And I have given this function in my GitHub account also, which is openly available. If somebody want to download, you can download this. We just need to understand how this function works. Now the next function is fetch data YF. I mean, it just fetches the data from the Yahoo Finance library. So we can give that period here, that how much time of data we need, what is the frequency of the data, and it returns back with us the data frame. Now we have defined the function BB. BB is nothing Bollinger Band, which we were just talking about. So here we defined the function. We have defined the standard, the Bollinger Band width is 1.5 to and 1.5, both entry and exit. We can increase or decrease also, depending upon, if we increase that, then the entry and exit criteria will not meet much, and it will take some time to complete the trade. So let us say, we'll say 1.7. So the trades will take some time, but it will mostly go in the profit. Now you can see we have declared simple moving average and standard deviation also. Like price field, we have given, we can pass it as close price. And similarly, we have defined lower Bollinger Band and upper Bollinger Band field, which is simple moving average minus standard deviation and simple moving average plus standard deviation with the Bollinger Band width, entry or exit. Is it understandable, Salil?
Yes, Sunil. I think we are able to follow.
Okay, great. So till here we have defined the lower and upper band of the Bollinger Band with the help of the close price. Now we will be defining the entry and exit criteria. Like we have discussed, if it is falling continuously for 4 days, then we will take and enter into the trade. So we are focusing only on the long, although we have defined for short criteria, we will not focus only on long. So entry criteria is simple moving average minus Bollinger Band width. In this case, it is 1.7 multiplied by standard deviation. That becomes the lower band. Instead of that, we can define lower band also. If it is greater than price field, mean the price has gone below that lower band, then we'll enter into that trade. And after that, we are saying if the same condition has happened today and Bollinger Band and ball entry dot shift one means yesterday and day before yesterday and 3 days back also. Mean 3 days
So
back.
basically 4 days you will get the same entry only, or the same Boolean value, only then you will take a long entry.
Yeah, absolutely. If it means indirectly, if the price is falling below that lower Bollinger Band continuously for 4 days, then we'll enter into the position. Similarly, we'll be exiting. Here the condition is just reverse, but we are checking only for 1, 2, 3 days. If continuously 3 days it is going up, then we'll come out from the position. So like that, we have defined that strategy here. Now we have defined the strategy. Now we will be calling similar, like we have used that engine in the previous example. Here in this example, we will be using that function called backtest strategy stop loss. So here we have called that strategy function BB. BB is nothing but the strategy function of Bollinger Band. We have called it here in this function. We have defined entry and exit criteria. We have defined which price field we need to use. We said we will be using close price. We have defined the stop loss percentage, target percentage, and here we are specifically saying that only profit is true. Mean if it is going in the profit, then only we'll exit. Will not book the loss at all. Doesn't matter how long it takes. So then, based on all these parameters, we have called the backtest function, and it will return us the buy and sell summary log that we'll see in the next cell how it comes. That's all here. Now we are seeing that we can do this operation on multiple stocks, because this particular event may not happen with same stock every day. So we cannot keep waiting for one particular stock. So whenever we have money and whenever we are out of trade for one stock, this very special event, we can take entry in some different another stock. So as of now, we have chosen, let us see for one particular stock first, Adani Port. Then we'll see for multiple stocks. Then here we are just using the loop of the list of scripts which you have defined in the previous cell. And we are running the same function for all the scripts. So I'll do one thing, I will run it only for Adani Port and see how it looks.
I think we've got some output.
Yeah, I'll just see. So these are the transactions which are generated over a period of 3 years. We have run this although we can run it for more than 3 years, but because we are using multiple stocks, we have kept it for the shorter duration as of now. But I recommend, because it's a daily frequency strategy, we should run it for longer.
Okay.
So this is the report which is generated by the system, the algorithm. It is buy price, buy time, sell price, sell time. I mean, at this particular time, the buy signal has generated, and algorithm has bought at this particular price. After that, the sell signal was generated on this date, and it has sold the same stock at this particular price, and it has generated 10.7% of returns or in the period of 57 days.
Okay. So basically, this table shows you the dates of all the executions and the return observed.
Absolutely. So
Okay, that's nice.
we can see that transaction by transaction, what is the full trade and has happened. And in the end, it is showing on 13th of May 2022, it has generated the buy trade, and the buy trade is still open. So it is not closed yet. So closing has not come because closing criteria has not met yet. And if we see that how much return it has generated just by seeing these 4 transactions, then it has generated 45% returns just by using four transactions so far.
Got it. Got it.
And as we can see, the last trade must have incurred here, which is somewhere here, maybe here, where the prices went below standard deviation, lower band, and it still has to go up.
Right. Right. So it
So
must have generated a buy signal.
basically here, but sell has not generated yet.
Okay. Okay.
So like
So
this,
this we have calculated the data from a very recent date.
yeah, the recent date, it is the last date is 13th May and the trade is still open.
Okay. Okay. Understood.
We have taken the data till now, mean till 10th of June. So it is using the open position there.
Got it. So as I can see, this script looks more long, or let's say more detailed than the one which we saw when we used Backtrader. But that is like part and parcel of the approach, right? If
Right.
we have to develop all the functions ourselves, then we need to detail out everything. We need to keep track of everything from the charting to the tables and everything.
Right.
But I think this gives you a lot of flexibility and options to customize your code as and when you like.
Absolutely. And because I generally use Tableau for visualization, and because I already wrote down my backtesting function, so I prefer using the custom backtesting function itself.
Got it. Got it.
But everybody has their own preferences depending upon but if you're writing everything by your own, it will take some more time. But as you said, it will give you some flexibility.
Yes. Yes.
Both has some pros and cons. We cannot say any which one is more correct. It all depends upon your preferences.
Right. Right.
So
Just to wrap up few of the questions that are still coming up, and I think we are getting this repeated question of what platforms are we using, where can we get this script from. So again, I would like to iterate that the current platform which you are seeing is Google Colab. It is very similar looking to Jupyter Notebook only, and the Backtrader platform was Jupyter Notebook. We'll mention these in the comment section as well, so you can download these platforms for yourself and start your coding experience.
And if somebody wants this particular script, ICICI, which we have just opened and we are discussing, I will upload this script in my GitHub account, that is Sunil Guglani. So you can go and download it from there if you want.
Right, right.
So any other questions, Ali?
I'm just seeing. Yeah, I think that sums it. Um, and yeah, we are I think we have covered most of the questions. So I guess we can wrap up now.
Okay. Thanks,
So
everyone.
again,
Yeah.
to users, yeah, so today we covered backtesting, and please watch this same space next week also, where we will show you a flavor of what the next step is after backtesting. You would probably want to do some paper trading and see what all can go wrong in backtesting as well. So I guess the next session we're gonna have is about the pitfalls of backtesting, right, Sunil?
Yeah, definitely, Salil, as you rightly mentioned, next session is going to be very, very interesting. So generally, most of the trader has a complaint that why my live trading doesn't work. I was getting very good result in back trading, back testing. Why I'm not getting the same result now? So this very common question and complaint from the algo traders. So we'll see what can go wrong that live live results will not come same as the back testing results. So we'll focus on that area. It is going to be very interesting.
Sure. Also, last question. Somebody is asking us if we can quickly show them Tableau. For that, I would just recommend our viewers to go to our previous video. I think we have very well shown how we can link Tableau with Excel and all the charting capabilities of Tableau. So you can just watch that previous webinar. It's beautifully detailed by Sunil himself. So yeah. All right. I would like to thank everyone for joining us today. Thank you, Sunil, for a wonderful session. And hopefully, next time we'll see even more exciting pieces of codes and learning on the similar quantitative techniques, right?
Yeah. Thanks, Alil. Thanks, everyone. Hope to
Yeah.
see you next week again.
Thanks, everyone. Take care. Bye bye.